I've got a special guest today. Gary Yeoman is the CEO of Voxtur Analytics Corp, trading currently on the TSX Venture in Canada under the symbol VXTR. Gary, welcome.
Thank you very much for having me.
You bet. Gary, can you give us a quick overview? What is the business of Voxtur Analytics?
So we're in the real estate technology business. We have multiple services. We do property tax analytics, so we provide a lot of that information to our lender clients. We're also having some products that are coming on stream. We do a lot of work with the province, with the municipalities, and we'll be issuing a new offering in the United States across the whole country shortly. In addition to property tax and the analytics, we represent many lenders, Morgan Stanley, Goldman Sachs, USDA, HUD, Wells Fargo, Bank of America, all of the major, lenders in the United States, Fannie Mae, Freddie Mac as well. And essentially we provide valuation services for them, as well as technology for lending. So the two primary services, we're in the lending side of the business. And we also provide title insurance as well, which was our latest acquisition that we got through ALAW.
Okay. It's a bit of an esoteric kind of combination of businesses that our investor group is sort of going to have a little bit of trouble understanding the significance for future revenues of this combination of businesses. Can you simplify it for me?
Yes. So I've been in the real estate business a long time. I was the founder of Atlus Group. I started that out of my house. It's a couple $1 billion company. I also put the first $11 million into Real Matters, was the first board member, helped, put together the business plan. And essentially, it went public, and there's also, close to $2 billion as well. So it's a lot bigger than you think. As far as transactions go, there's probably, about 15 million transactions that take place a year in the US. And about 10% of that in Canada. But essentially, if you look at it in a very simplistic term, everyone has probably bought or sold a house, or most people have. So when you do that, you go to your lawyer, and the first thing you do is the lawyer has to get all of the information together. But you need a valuation for mortgage purposes. You need to verify the property tax that you're paying, whether it's too high, too low, and whether that's appropriate. You need title insurance. And so all of the those issues with respect to closing of a property, we now provide the full scope of services for those closing. In the title insurance side, we deal with title insurance providers, but we've also come up with our own proprietary platform. It's called Attorney's Opinion Letter. And so essentially we can do it the same way it used to be done before, but significantly less price. But we do offer title insurance by all of the main providers. We provide tax analytics, as I said before, so we can tell you whether tax is too high, too low, and by how much. And every time someone has a mortgage, the property has to be valued. And then incorporated with that valuation, you need to determine whether that purchaser, has the financial capabilities to carry, the mortgage on the property. So when you take a look at the marketplace throughout all of the United States, and you look at all of the transactions that are taking place, we fundamentally have, basically imposed ourselves to all aspects of that closing. But what we have done, which most people have not, is that we brought technology into this. We brought AI into this. So the whole goal is to be more accurate, to do it quicker, and to do it cheaper. And we've now firmly are establishing ourselves as that go-to service provider in the technology space.
Mm-hmm. So a one-stop shop for all things real estate.
Most things.
Okay.
Yes.
So then how are you going to build a customer base out of such a diverse array of products that essentially constitute the back end of property transactions?
Okay, so that's been done. If you take a look at the transactions that have been, and if people followed me when I was at Altus, I did over 30 transactions that I was when I was there. The last one was Argus, which was a $130 million transaction, is now the go-to discounted cash flow offering in the world. It's taught in 133 universities now and linked into every major accounting platform. When we when I took over, I came in just as a board member, and the company was called ILOOKABOUT that, and I just sat for a few years on the side, basically looking at the people that I had, the skill set they had with the programmers, the business plan, and I quickly came to realize that I love the people, I love their capabilities, but I hated the business plan. And so I waited around long enough, and I basically said, I'm either in or I'm out. So I put $2.5 million of my own money and said, I'm in. And I'm going to take over, and I'm going to take over the CEO's role. And I'm going to take over, keep the chairman's role. And so effectively in the 2.5 years since I did that, the market cap at the time that I took over was around $10 million and 12 cents a share. Today it's bordering on $1. And we have a market cap, enterprise value in excess of $400 million. So there's been, a massive change. Why have we been, viewed as a company that is on the rise? Is because, number one, we bought a company called Clarocity. I think you're familiar with that. It was Colin Fisher's baby a while ago, and we didn't particularly like the business the way it was run, or I didn't, and so it was effectively bankrupt. And so I took it out of bankruptcy and kept it for one reason. They had approximately 150 master service agreements. They had contracts with Fannie Mae and Freddie Mac and Morgan Stanley and Goldman Sachs, USDA, HUD, PennyMac, all of the large lenders. And so it takes you 5 years to get in. The whole vetting process to get in, as far as not only your financial wherewithal, but your technical capabilities, it takes 5 years. So I basically said, I can fix this company, but what I can't do is, wait 5 years to get clients. So effectively what we did is we cleaned up the balance sheet. We improved the productivity of the company. And in the 2 years approximately we have it, we will be cash flow and EBITDA positive on this company by the summer, this particular summer. But the most important thing is because we have this valuation and we have the technology, and we do it in a hybrid way. Like if you look at, some competitors like Real Matters, they get an offer or an order from the bank to do an appraisal for mortgage purposes. They find an appraiser and they give it to the appraiser. He values it, gets it back to Real Matters, who does a quality control, and back to the bank. That process right now, because of the demand, is taking 2 weeks and costing $600. So we've come up and we've digitized the industry. And so effectively, and Fannie actually came out last week and said, we are only going to accept now appraisals that are digitized. If you take a look at the appraisal community, the average age is 62 years old. The appraisal groups that are out there do not have the wherewithal to build technology and platforms to be able to service the lending community in the way that they want it right now. So we now have the capability to digitize every appraisal record in North America. And what I mean by digitizing is that we can actually go out with our tablet, they can key in their data, it'll automatically go on a digitized appraisal record. And so that's pretty compelling. On top of the digitization, when the appraisal finishes it, we monitor, we have our own Uber, we call it Appraiser Uber app, where we actually can control what work they do, because if they're working on this street and we got cars in this street, we can move more, just like the Uber app works, on that when you're ordering a ride. So we've got the whole workflow that we've taken over for the appraisers. We've digitized the appraisal record sheet. So what's next? What's next for us is that we're actually going to totally populate these things for the appraiser. We're actually going to give them their comps. We're going to give them a value. So think about this. Would it be attractive to you if you were a lender, if I said, instead of taking 2 weeks and $600 to complete your valuation, how about I give you your value in 36 hours and only charge $300? Because, and why is that good? And why would that be good for the appraisers? Well, the appraiser right now, doing it manually the way it is, can only do one appraisal a day. Under our platform, when we basically provide all of the data and the values, and it's fact checked in a number of different ways, he can actually go through that platform and he can do 25 a day, sitting in the confines of his house. He is the appraiser. He is the expert. He's the one that's authenticating and basically verifying the sales, but he can do 25 a day. So instead of him making $350 a day, he can make himself between $1,500 and $2,000 a day. So we've taken care of the appraiser. We're really, really happy with us now. We're taking care of the lenders are really, really going to be happy with us now because they can get it quicker. And most importantly, we've done one other thing that's completely, I think is brilliant, is that right now, if you go to a Bank of Montreal or some of these other banks and they ask, and they get the appraisal done, the purchaser gets the appraisal, the bank gets the appraisal. By the time the bank says, okay, let's do this, the purchasers already went out and basically shopped it around and ended up giving the work to someone else. So how do we combat that? We put it on a private distributed ledger, a blockchain. So why is that great? Because number one, only the lender can look after it now. Number two, we have it. And guess what we're doing? We're creating a central repository of data that where we already have 140 million properties on our database, we'll completely, filtrate that and update that and upgrade it. And it's an ongoing process, which I call knowledge momentum. And so we built this whole, and so you say to me, well, we got these little disparate groups. Well, we've talked about how we're revolutionizing the appraisal and the valuation, but every time they do that, we're also saying to the lender, well, we'll place the title insurance for you at the same time. And by the way, since the debt service is the largest expense, the second largest property tax, why don't we just give you a little report to say whether the taxes are too high or too low and by how much? So all of a sudden now you can see, how that little puzzle is coming together and how we're actually can touch millions of properties, in a year, millions through technology that is not being offered anywhere else.
Wow. Fascinating. Your stock price has really, exploded in the last couple of weeks. What is the main catalyst driving it, besides obviously the fact that you've consolidated these companies into this unique offering?
Sure, it's pretty simple. I believe in a plan. You have to have direction. Direction doesn't mean you have to go 100 miles an hour. Direction means that you have to have that plan and you go in the right direction, you stay on that path. And I'm not going to go out there and tell the whole world that I'm doing this, I'm doing this, I'm doing this, I'm doing this until I'm ready. Because quite frankly, there's a lot of naysayers, and I had that through my career at Altus. Guess what's happened? The little business I paid $130 million for is now worth $1.5 billion on its own. So I have, in my opinion, and it doesn't mean I'm right, but I think I have a very good sense of what's happening in the real estate. Like I'm a farmer of real estate. I've been in this business for 40 years. I know what's coming. I know where we have to go. I know how technology has to play a role in it. I'm not one of these new breeds where I'm really, really smart. We build this great tech and it looks really, really pretty, but no one's going to buy it. You have to be a farmer at heart to understand what your clients want. And if you could taste the soil and smell the soil and know what kind of seed goes in there and germinate it and get the best productivity, that's called a farmer. And, I grew up, spending my summers on a farm, and my grandpa told me everything. And essentially the analogy here is this is just like a farm, but only in real estate technology. So putting this together is very quiet. But if you take a look at all these real estate tech sales that are happening today, they're all selling at 15, 20, and 25 times revenue. Up until 2 weeks ago, when I basically started introducing my product, did you realize that we were only valued at 2 times revenue? All right. We have so much upside. And so all of a sudden now I've laid out this nice little plan. We put together, I'm not finished. I got, 2 or 3 more tuck-ins that I'm going to do that are very, very strategic to kind of finish it off so I can go forward and say, look out. And so I'm very excited. I'm getting market stimulation right now. We do have our targets already picked out, so we know where we're going to go. And when I build, a business and buy businesses, it has to be technology, it has to be real estate, it has to be accretive, and it has to be synergistic. All right. And if I can get all of those benefits in there, then we're going to do the deal. And so why are we successful? Well, talk about the Bank of Montreal. I think that we're the only small microcap company in North America where a Class A bank has not only invested in us from an equity standpoint, but also has given us an unlimited debt facility to help purchase these businesses. We can buy them at 6 times. We get 3 times from the bank from debt. we get 2 times vendor take back, and I get 1 times an earning that I pay for the profit. So I can do these acquisitions that all of my competition can't do right now because they don't have the facility. And why am I able to do that? I probably made the Bank of Montreal, I don't even want to tell you how much, but hundreds of millions of dollars between, Real Matters. Like I brought the Bank of Montreal as their first client. I brought the Bank of Montreal in for debt and credit facilities for Real Matters. I did the same thing with Altus. Every deal we did, they participated in the private placements, the offerings of all sort. And so basically, when I went to them, I said, I think I'm ready now. They said, well, great, because we always back the jockey. So we're in. They've helped me. We've got $27 million worth of a debt facility. I think that we're going to be enormously profitable. And so, it's where we're going to go.
Sounds great. I love the fact that you've been there and done this before. Full disclosure, I am a shareholder of the company, and I can plan to keep buying it. So I'm conflicted. But Gary, I love the story, and we're going to follow it closely. I'm going to feature it in my upcoming edition of the James West Letter. Thank you for your time today. We'll come back to you soon.
Thanks for having me. Appreciate talking to you.